Palantir's AIP grabs the spotlight as businesses rush to adopt AI-driven platforms. Close to 300 entities have already adopted AIP, a whopping attachment rate of around 90%. Management notes a surge in bigger deals and quicker conversion times. Though Palantir's price carries a premium, it's a testament to its quality. What better way to ride the AI wave than hitching a bet on the town's best surfer?
Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha. Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys.
Palantir, NYSE PLTR, is constructing the software foundation for tomorrow, serving as the nerve center for enterprise operations. At its core, Palantir's flagship systems, Gotham, Foundry, and Apollo, streamline data, decision-making, and operations on a massive scale. Recently, Palantir unveiled its artificial intelligence platform, AIP. In a nutshell, AIP links extensive language models and other AI technologies with clients' data and operations, effectively powering AI-infused decision-making. Notably, AIP has stolen the limelight, propelling Palantir's overall business amid the fervor surrounding AI. As AI's significance skyrockets, Palantir stands to gain the most from this trend, wielding one of the most robust software systems in the industry. It's cherished by numerous influential organizations. While Palantir's stock might appear pricey, the company's unique AI offering, promising prospects, and financial growth paint a promising picture for a standout 2024. In Q3, revenue surged to $558 million, marking a 17% year-over-year YoY increase, surpassing analyst forecasts by $2 million and outstripping management's guidance by $3 million. The company witnessed a revival in growth following a lackluster second quarter that saw a mere 13% expansion. Investors who had grown concerned about the slowdown found renewed optimism in Palantir's stellar Q3 performance, hinting at a potential return to robust growth. If we exclude the adverse effects from strategic commercial contracts or Palantir's unsuccessful spacey investments, Q3 revenue would have soared by 21% year-over-year. Even more impressive is the near doubling of revenue per employee over 4 years, soaring from $299,000 to $558,000, showcasing the success of its strategy to acquire, expand, and scale. Analyzing by segment, government revenue emerged as the lagging component, climbing a modest 12% year-over-year to $308 million. Revenue from the U.S. government stood at $229 million, marking a sluggish 10% year-over-year growth. Despite this, management anticipates a speedier momentum in U.S. government revenue moving forward, citing a pickup in activity at the end of the U.S. government fiscal year. In contrast, international government revenue displayed better performance, surging 20% year-over-year to $78 million. Conversely, the commercial segment bounced back in Q3, experiencing a 23% year-over-year expansion amounting to $251 million. Notably, the growth accelerated by a substantial 1,300 basis points sequentially. The growth engine was predominantly driven by U.S. commercial revenue, which surged 33% year-over-year to $116 million. If we exclude strategic commercial contracts, this figure would have spiked by 52% year-over-year. This notable upswing was primarily attributable to Palantir's recent introduction of its latest offering, AIP. Considering that AIP was launched just this April, its substantial impact within a few months speaks volumes about its potential in the coming years. One of the most remarkable aspects of Palantir's Q3 earnings report was its solid customer count, surging by 34% year-over-year to a total of 453 customers. In particular, its commercial segment displayed remarkable growth, shooting up by 45% year-over-year to encompass 330 commercial customers. This phenomenal uptick was largely spurred by heightened demand for AIP, the artificial intelligence platform. What's truly impressive is the disclosure from management, highlighting that nearly 300 companies have utilized AIP, representing an attach rate of approximately 90%. Palantir's customer acquisition strategy seems poised for robust revenue growth. The expansion and scaling of its platforms by these newly acquired customers should inherently contribute to the company's financial upswing. This is reflected in the revenue per top 20 customer, which surged by 13% year-over-year, hitting a record high of $54 million per customer. Moreover, the company's acknowledgement as the leading vendor in AI, data science, and machine learning bolsters its position in an intensely competitive industry. This recognition reaffirms Palantir's capabilities and stands as a testament to its continued success. Palantir hit a new high in Q3, registering a record gross profit of $450 million, marking a 22% increase year-over-year. This resulted in an impressive gross margin of 81%, signaling a substantial 400 basis points improvement compared to the previous year, also hitting a new high. Clearly, the gross margin has been on an upward trajectory over the last few quarters, illustrating the company's ability to achieve economies of scale as its business expands. Q3's operating income reached $40 million, marking a 7% operating margin. This marks the third consecutive quarter of GAAP operating profitability for Palantir. It's noteworthy that the operating margin surged by an impressive 2,000 basis points year-over-year, indicating a strong leverage in operations. This positive trend is expected to continue as both Palantir and its customers continue to grow in scale. Moreover, the improvement in operating margin is anticipated to persist since share-based compensation, SBC, has been gradually declining over time. In Q3, SBC as a percentage of revenue stood at 20%, marking a notable 900 basis points decline year-over-year and a 100 basis points sequential drop. While SBC remains relatively high at 20%, resulting in almost a 4% year-over-year increase in shares outstanding, the impact of dilution should gradually diminish over subsequent quarters. Palantir is diligently focusing on bolstering profitability and curbing SBC expenditures, which should alleviate concerns about dilution over time. Palantir's bottom line also reflected the positive momentum, securing its fourth consecutive quarter of GAAP net income profitability. Q3's GAAP net income stood at $72 million, translating to a 13% net margin. Each profitability indicator for Palantir has hit historic highs and displays no indications of a reversal in their trajectories. It's evident that Palantir has reached a crucial turning point. It's transitioned from being seen as a growth company incurring losses to becoming a highly profitable growth enterprise capable of consistently delivering robust and sustainable earnings in the years ahead. Palantir boasts a robust financial standing with $3.3 billion in cash and short-term investments and $0.2 billion in total debt, primarily operating lease liabilities, resulting in a net cash position of $3.1 billion. Over the past few quarters, Palantir's net cash reserves have been consistently climbing, a positive trend for the company's financial health. Q3 saw a free cash flow of $132 million, translating to a 24% free cash flow margin. Palantir has consistently demonstrated a robust ability to generate free cash flow, and looking ahead, a sustained free cash flow margin surpassing 30% wouldn't be surprising. Given its healthy net cash position and robust free cash flow profile, Palantir initiated a $1 billion buyback program in Q2. However, there's been some skepticism surrounding the timing of the buyback program. It was announced after the stock had surged over 100%, leading to concerns about its rationale. While buybacks are appreciated, they're more beneficial when executed at an attractive valuation, not after a stock has doubled. As of Q3, Palantir hasn't yet proceeded with the share repurchases. Considering the stock's more than 150% year-to-date increase, it might be wiser for the company to conserve its cash for potential future needs or direct it towards further growth endeavors. A buyback could be deemed more suitable during a market downturn or a significant stock price decrease. For Q4, management anticipates revenue to hit $601 million at the midpoint of its guidance, surpassing analyst estimates by $2 million. This outlook suggests an 18% year-over-year increase, maintaining the momentum from Q3's 17% growth. Adjusted operating income for Q4 is forecasted to hit $186 million at the midpoint, projecting an adjusted operating margin of approximately 31% based on a $601 million revenue. This reflects a 200 basis point increase quarter over quarter and an impressive 900 basis point increase year over year, signifying an enhanced profitability outlook. Moreover, management revised their FY 2023 revenue guidance by $6 million to $2.218 billion, projecting a 16% year-over-year growth. Additionally, they adjusted their FY 2023 adjusted operating income guidance by $33 million to $609 million. This adjustment, favoring the bottom line more than the top line, signals strong operating leverage for Palantir. The upward trend in profitability continuing through 2024, largely supported by a robust deal pipeline. In Q3, Palantir sealed its highest number of deals, surpassing $1 million in a single quarter. 80 deals at least $1 million spanned 30 different industries. 29 deals exceeding $5 million spanned 16 industries. 12 deals totaling at least $10 million across 11 industries. It's intriguing that management highlighted the range of industries covered, emphasizing Palantir's versatile application and ability to attract a diverse clientele. Additionally, the total contract value surged by 29% quarter over quarter to reach $830 million. Moreover, the count of U.S. commercial deals escalated by 2.4 times year over year, while the total contract value for U.S. commercial deals jumped by 55% year over year, reaching $252 million. The most exciting aspect is the acceleration of larger deals and faster conversion and expansion timelines mentioned by management. This is attributed to the strong traction of AIP and Palantir's revamped go-to-market strategy, particularly the AIP bootcamps. This bodes well, as these upcoming deals are likely to reflect in Palantir's income statement sooner rather than later. More significantly, the AI market is anticipated to explode from $96 billion in 2021 to a staggering $1.8 trillion by 2030. With Palantir's top-tier software, it stands in a prime position to capture a substantial portion of this burgeoning market. Considering Palantir's resurgence in robust growth, enhanced profitability, a flourishing deal pipeline, a successful new marketing strategy, and the burgeoning AI market, it appears Palantir is gearing up for an exceptional year in 2024. Palantir isn't exactly a bargain buy, especially after its whopping 180% surge this year. It's rather pricey, and we might see the stock tapering or trading sideways for a while before potentially resuming its upward trajectory. Currently, it trades at a forward EV to revenue multiple and a forward PE ratio of 13x and 61x, respectively. Even though these multiples have moderated from their peaks, Palantir isn't inexpensive by any measure. But perhaps this reflects the premium one pays for a company with strong competitive advantages and improving fundamentals, riding high on robust market trends. We've updated my DCF model, making some key assumptions for my base case. As CEO Alex Karp noted in his shareholder letter, companies are hustling to find a platform to harness the potential of AI. And that's where Palantir's AIP comes into play. The launch of this new platform is expected to drive robust customer growth, both acquiring new clients and satisfying existing ones, which should translate into sustained revenue growth for the foreseeable future. Furthermore, Palantir's growth prospects appear promising, especially with the AI landscape still in its early stages. Adding to its growth narrative, Palantir's profitability continues to climb, shedding its identity as a loss-making growth entity. Despite Palantir's substantial rise in 2023, there are solid reasons suggesting potential further upside for the stock, including re-accelerating growth, improving margins, a robust deal pipeline, a refined strategy for market approach. Potential inclusion in the S&P 500 all signs indicate that Palantir seems poised for a standout year in 2024.